couple of days ago, the Prime Minister announced changes to the Active Investor Plus visa category. It's a visa that was created to attract wealthy migrants to consider moving to New Zealand and provide their assets, their finances, their skills to assist people within this country in exchange for that looking at residency visa being granted. Now, the government has now made changes to that, or have announced changes to that, and we're going to look at those changes today. Now, the reason being given as to why the AIPV is needing to be changed is that it's only attracted 70 million in investment in the past 2 years, as opposed to the previous migrant investment class visas, the MIC 1 and 2, that provided 2.2 billion in the 2 years before the pandemic. Now, contacts at NZ Trade and Enterprise, the government department who are involved in dealing with this, have indicated that the old migrant investment visa also took several years to get started. So we think there's probably not so much a fairness of comparison between looking at 2 years of a well-established visa against 2 years of a new visa brought in just at the end of the pandemic. Now, to better understand the changes that are coming through, we need to understand what has gone before, both in the original migrant investment categories 1 and 2, as well as the current Active Investor Plus visa. Now, looking back at the original, the migrant investor category, there was broken into the two categories, 1 and 2. The first one required a $10 million investment, as well as not having any limits as to English or age limits. The investment category 2 was on a point system, and you sort of got points for various things, but it was never very difficult to get enough points to actually not be selected. And at the end of it, we're looking at about a $3 million investment to be able to apply under investment category 2. There's also a maximum age of 65 and a minimal English ability of IELTS 3.0. Now, to give a comparison there, to apply for residency through employment requires an IELTS level of 6.5. So it is somewhat lower than is required to be a migrant in a residency through employment in New Zealand. Now, to make their residence permanent at the end of the residence period, those on a migrant investment category 1 required 88 days in New Zealand over a 3-year investment period. So they can provide it over that 3 years, not per year, but it could be all in 1 year. That depended on the investment. Different investment types gave different allowances there, but that was the minimum level. Now, investment category 2 required 438 days in New Zealand. Again, that's the minimum level required depending on your investment over a 4-year period. So at least more than 1 year in total, but you could divide that over multiple years if you wanted. Now, why was the Active Investor Plus category introduced when we already had this multi-billion-dollar investment scheme that seemed to be working well? Well, it was introduced in 2022 to replace those investment class 1 and 2 visas. The idea being that the government wanted to make the investments more active, hence the term active investor, so that people would bring more skills to New Zealand rather than just money. And it worked through a very complicated scheme where there was a $15 million investment that was required, but some investments would get a multiplier effect. For example, investments in startups approved by NZTE, as in Trade and Enterprise, would get a 3 times multiplier effect, meaning only a $5 million investment would actually be required to go ahead with the AIP. At the same time, the government introduced a higher English language requirement, so up from the original 3 to IELTS 5.0, so the applicants would be more readily to integrate into society here, having a better English base standard. Now, the overall reason for the change did have merit on the basis that New Zealand wanted to attract more than just money. We wanted the skills and that were attached to the people that brought the money in. We want people to come to here and be more actively involved in the operation of the business in New Zealand rather than just providing funds to fund it. But it's questionable to say whether it actually worked or not, and it depends on who you ask. More correctly, it comes down to whether it hasn't worked or hasn't been given enough time to work. The current AIP was introduced in 2022 when much of the world was sort of coming out of the pandemic and sort of definitely recovering from it. I think we still are to some degree. And our own border only opened in July 2022. So we're comparing 2 years from an established visa prior to the pandemic, been there around for a decade, to 2 years of a visa just introduced at the end of a global pandemic. However, that doesn't mean that with time it was going to see the same level of investment that we saw with the migrant investment category visas. That was never going to happen. It was just too great a difference between the two, with the demands of the Active Investor Plus category being too high to ever being seen as being as successful as the old category. The higher investment amounts in most situations were going to be detrimental, as was the English language requirements, but the most influential aspect was going to be the investment categorisation. The old migrant investor categories classed all investments as the same. An investment in a startup was the same as getting bonds, even though they had different values to New Zealand. People would enter New Zealand, put their funds into bonds or invest in relatively well-established listed companies to the purchase of shares, and then sit there feeling safe and being relatively safe. Active investor plus visas and the use of its multiplier would allow smaller high-risk investments to be used to meet the requirements while putting less funds at risk. Multipliers range from 3 times for direct investments in NZTE-approved companies, 2 times for NZTE-approved managed funds with a focus on riskier New Zealand investments, and 1 times for listed equities and philanthropy. So then a $5 million investment in an NZTE-approved startup would, with its 3 times multiplier, would be enough to meet the $15 million investment required for an AIP. Those who are more risk adverse can look at the $7.5 million invested in approved managed funds, again the ones approved by NZTE, or you've got the 15 millions in listed equity and philanthropy, or some combination of all of those options with multipliers applying to each of the different amounts, just so you get up to 15 million as a total amount. So it could range from 5 million in that high risk NZTE approved startup through to just 15 million in invested equities and philanthropy and things like that, or somewhere in between. This is where we start seeing the changes and the impact of the changes. So the changes tidy all of this up and make it much simpler than this multiple multiplier sort of situation. In most ways, there are still some questions to be answered. It removes the multipliers, leaving people with 2 options. The first they've got is investing 5 million in what they're calling growth investments, being NZTE approved startups and NZTE approved managed funds. These retain the same risk as mentioned earlier. They're also reducing the investment period to 3 years. We'll come back to that later as to whether that actually makes a difference or not. For a reduced risk, you can do a $10 million investment in a more secure investments that are available. They need to be maintained for 5 years or 2 years longer than the high risk one before you can gain that permanent residence. They're also reducing the English language requirements as well as reducing the time required in New Zealand to as little as 21 days for the $5 million investors, or as low as 64 days for the $13 million investments. Now that wasn't a misspeak there. We'll touch on that later as to how we suddenly got to $13 million. Now that investment period is extremely important, whether you're looking at 3 years for a $5 million investment or 5 years for that $10 million investment. And there's really 2 reasons why this is important. The first is that when the applicant may free the funds from the investment and use it for something else not related to immigration. Now for those of you in the riskier investments, this will be attractive because you're hopefully going to get out of that investment a little bit faster in 3 years rather than longer, as they're typically high-risk investments, so getting out of there is a little bit safer. However, it also won't be that realistic in most situations. Despite what the government requirements are, that 3-year requirement, such investments are usually tied up for a longer period of time. So these are not shares that you can easily buy and sell, but they're investments that tie you to the company for a period of time, typically much longer than 3 years, possibly 5 years. So while the requirement may be going to 3 years, whether you can actually get out of the investment in 3 years is another question, and sort of raises the question as to whether that is this an artificial 3-year period. It's not artificial in the fact that it lets you apply for permanent residence at the end of that 3-year period. At that point, that condition comes off and you get PR. It just means that the investment itself might not be as equally released as that government obligation. Looking at that time in New Zealand, as I said, that $5 million investment will reduce your time in the country to just 21 days over a 3-year period, which is by far the lowest we have ever seen. Honestly, we'd be surprised if we didn't have investment clients in New Zealand for at least a couple of weeks per year, so it's certainly at the very much the low end. For those looking at the $10 million safer investment, that base minimum is 105 days within the 5-year period, again spread out over that period, all in 1 year, up to you. However, additional investments can reduce this. So an extra $1 million to 11 goes down to 91 days in that 5-year period. $12 million down to 77 days, and finally $13 million, as we said earlier, down to 63 days in New Zealand over that 5-year period. We're not sure how many applicants are going to see the additional investment of $3 million as being good value just to miss out on being in New Zealand for 6 weeks over 5 years, but it is an option the government has introduced for a reason. Perhaps it's been requested for, not something that we have been seeing from our clients. Now, our view on these changes, when we first saw the Active Investor Plus visa, we saw it as an unrealistic solution to a problem that didn't really exist. We definitely would love to see more active investments with skilled people taking more of a role, but making it a requirement did not mean we're going to find more applicants. Well, we do believe it's too early to see Active Investor Plus as a failure as it currently stands. It certainly was overly optimistic as to the number of applicants New Zealand was likely to receive, and what we're probably seeing now is what we probably should have expected in the first place. It also ignored the other value that investors have in this country. While passive investors may not have as much of an impact as active ones, their presence in New Zealand has other positive outcomes. Their increased expenditure means the creation of jobs, as does the tax they introduced. With such people who in New Zealand who are wealthy, we often see others who are coming to visit them, again bringing in more tourism, bringing in more money, and adding to our country. An investment visa applicant provides more to the country than merely the investment money they are bringing in. Or we may have seen a $2 billion reduction in the investments between the old category and the new one. The cost of the country would have been far greater than that. Those people who have come to the country and brought other money with them and spent that money in the country. Now, we have yet to see the new instructions, and we're commenting here on what's been provided in the press release as well as provided by the ministers in their announcement the other day. We have several questions which will need answered and look forward to seeing the actual final written rules. If it is exactly as provided and the rules are written well, this will be a win for New Zealand.